Welcome traders once again to the next module in types of support and resistance, and now we're talking about Fibonacci retracement. So Fibonacci retracement is all about the market pulling back to a certain level before continuing on in the direction of the prevailing trend. Let's look at some diagrammatic examples, but before we do that, I want to tell you a couple of key levels that the market generally tends to pull back to. So these key levels are 23.6%, 38.2%, 50%, and 61.8%. As a quick example that you can see here, this example is taken from an upward trend where, let's say, this point here, for the sake of this example, is 200 and this point here is 100. Now, if the market were to pull back from its previous swing high to come down to this point here, this may be classed as, if it comes back to 150 just here, so this may be classed then as a 50% retracement. So the key level that this market has retraced to is the 50% level. The same thing applies when we're going short. Let's take a look at this example over here, where once again we'll take this as 100, here as 200. And let's say, because we're in a downward trend, the market retraces this time from this swing low, and it comes back to, let's say, this point just here before it continues its downward move. We could look at a Fibonacci retracement and perhaps class that as a 61.8% pullback. So this is how we use Fibonacci. There are different levels, and there is an indicator on the graph which will allow you to see to what level the market has pulled back. This is best explained using some live examples, so let's do that right now. So traders, welcome to this live set of examples on Fibonacci retracements. This is one of the most powerful tools in a trader's arsenal as far as I'm concerned. It uses pure price action. We don't need any indicators of any sort to understand, Fibonacci retracements. It's very useful, of course, to quantify swing highs and lows, which is what we've done here. You can see the smart money indicator on the screen, but the Fibonacci retracements themselves, they're an excellent tool that use off of the back of this. Now you can see here on the US 100, this Nasdaq 100 chart, we're in an uptrend here on this daily chart, and what we can do is understand Fibonacci retracement on this upward trending chart. So if I wanted to understand, for example, let's say, and let's do some live examples, including some historical examples as well, so we really get a feel for this. Let's say, for example, this move just here, let's say that we hadn't seen it happen yet, and we were looking to predict how far the price was going to retrace before it carried on its upward move. Well, the way we would ascertain that is by using Fibonacci retracement. I'd draw from the swing low to the swing high, and then I'd start reading out all of these levels where this move has done its retracement to. And you can see here on this Fibonacci retracement, you can see very clearly that the 38.2% level is the one that has been reached just here before the price bounced and then made its upward move. Now, of course, this has happened in history, so it's easier to see. Let's take a look and see some real life examples for how we can use the Fibonacci retracement. Let's go right up to this current point in time, and again, you can see we are very much in an upward trend here at the moment, and you can see the price retracing. So my expectation as a trader is that this upward trend will continue to carry on, to persist, is the correct terminology. And where should it persist to? Well, I'll be able to answer that question by looking at Fibonacci retracement as one of the key elements, and you can see here very clearly that you've had a retracement at this time to the 78.6% level. Now that is quite a large retracement, and you don't often see the 78.6% level being reached. I haven't got an exact quantification for that, but that is true. You don't often see those levels being reached. If it continues down much further, there is of course a chance that it could break this previous swing low. That's also another possibility as well, and that would mean that the move would exceed even more than 100%, which would make it a a new trend that's setting up here in the market. So you can see we started where we were actually in an upward trend here, but if this previous swing low is broken, then of course it will switch from being an uptrend to a downtrend, and we would then of course look for downward trending opportunities and would look for Fibonacci retracements in the other way. Let's also look for Fibonacci in another different style. Let's look for it on a different market where we can see an example of a short. Okay traders, so here we are on a chart of the euro against the Canadian dollar. This is, of course, is a currency and can be considered under foreign exchange trading. So let's take a look at the Fibonacci retracement here. This time we're in a downward trending move. You can see Smart Money Indicator does tell us that the trend is currently down. What we do is draw a chart, Fibonacci retracement from swing high to low. And again, look, you can see here the retracement has been quite a heavy one. 78.6% the price has retraced to. And very, very interestingly, you can see that the price is now moving lower. So there is a chance, of course, that this may now confirm as a swing high in the market if the price does continue to move lower, bouncing off of this 78.6% level. So the 78.6% level is one of the key factors that we can use to make judgments or to make decisions in taking a trade opportunity. And this is what is absolutely important to understand and realize with the Fibonacci retracement tool.
We trust you enjoyed our Traders Education Center tech video. To unlock the full tech modules for free, click on the link below and hit the subscribe button. Then go ahead to register with your contact details and create your unique username and password to enjoy the fully unlocked tech modules.